Okay, let's get going with our simulation for DeCre Food Trucks LLC using QuickBooks Online. Again, we're going to start with the catch-up mode, and after that, towards the end of the simulation, we'll transition towards live mode. And we'll demonstrate different ways to accomplish what we need to accomplish. Okay, first one is a receipt, an invoice that we paid by credit card. So we're going to go new, expense. Here it is. Whom did we pay? Food Traders. Okay, we paid it using our credit card. Okay, again, date that we paid it. Alright, credit card method. Alright, we're going to use invoice numbers as our reference. Alright, and then the expense, meat products, bread products, sounds like that's our food purchases, right? Okay. We're going to use our invoice number for description, and then we enter our amount. Alright, here we are. So what's going on in terms of debits and credits? Well, one thing we know for sure, right? Our expenses are going up, and expenses go up when they're debited. So here it is. What else is happening? Well, we're paying it using our credit card, right? Credit card is a liability. Liabilities go up when they're credited, right? So this amount right here is 602.91 is a debit to this account, 6,200. This amount, all right, is a credit to this account, 21,100. Okay, so here we are, saving new. All right, what else we have? We have another invoice that we paid using credit card. Paid to go packs. Okay, credit card. 11/26/2020. Credit card reference number. Alright, so that was food containers, drink cups, so that's our restaurant supplies. Alright, so here we are, amount $83.17. Okay, good. Alright, what's going on in terms of debits and credits? We kind of just covered it, right? But let's again make sure we understand. Our liability is going up because we are paying this expense using our credit card, right? So account 21,100 is credited because liabilities go up when they're credited. What else is happening? Well, our expenses on restaurant supplies go up as well. And so here we are, right? So this amount right here, 83.17, is a debit to this account, 6,100. This amount, 83.17, is a credit to this account, 21,100, right? Okay, so here we are, saving new. Next, we have our invoice that we paid with the check, right? This one we can still process technically through this expense, or we can assign a check number. So let's assign a check number in this one, and then in the following month we'll process it through this interface, just to kind of diversify, right? So here we are, we go to new in checks. Okay, so payee. Alright, make sure we enter our bank account. Here it is. Alright, check number we're going to enter manually, so make sure this box is unchecked. And our check number is 1002. Okay, here we are. And we're buying garbage bags, sponges. Sounds like we're buying our cleaning supplies. Okay, here we are, our invoice number. We're going to enter in the memo box. Okay, and amount is $97.14. So here we are again. What is being debited? What is being credited? Well, we know one thing for sure, that once the check clears, our bank account will be reduced by $97.14. So it has to be credited because assets are reduced through credits, right? What else is happening? Well, our expenses on cleaning supplies will go up, and expenses go up when debited. So here we are, right? And therefore, this amount right here is a debit to this account, 6,400, And this amount right here is a credit to this account, right? 11,100. So that's what this check is. So let's go ahead and save and new. All right, so this check was saved. Next, we have an invoice that we paid using a credit card. So we're going to exit the checks, right? And we're going to go and book another expense through the expense module. So we paid soft drinks. Again, we have the credit card as a payment method. All right, so 1/19/2020. Okay, credit card. 78102. Okay, and we're buying soda and drinks, and that sounds like our drink purchases, right? Okay, and we're going to continue using invoice number as our memo box. All right, so here we are. Everything good to go. What's going on in terms of debits and credits? Well, again, let's start with the simple. We know expenses are going up. So here it is, expenses go up when debited. What else is happening? Our liabilities go up because we owe more money to the credit card company because we paid it with our credit card. So 21,100 is going to be credited because liabilities are increased when they're credited. And again, you can see the debits and credits are in balance. Here we are. This amount right here is a debit to this account, 6,300. And this amount right here is a credit to this account, 21,100, right? So here we are. We're going to save. Okay, it's been saved. So here we are. What else we have? We have another invoice that was paid using checks, right? So we're going to go and we're going to enter another check. So here it is. Payee Big Lease Company, bank account correct. All right, we're going to enter the date. All right, check number good to go. All right, 103. Here it is, and we're doing expense to multiple categories, right? So let's take a look. First, we have our rent. All right, and that is going to be 1,000. And we're going to enter in the description, we're going to enter our invoice number. What else we have? We have insurance. Here it is. 150. What else we have? We have dues and subscriptions for the registration fee. Here it is. What else do we have? We have maintenance and repairs. Alright, and we have advertising and promotion, right? Because this is for the artwork that they put on our truck, but they're charging us on a monthly basis instead of a lump sum. So again, let's enter that invoice number in the memo box. Okay, here we are. So what do we have? Well, again, we know one thing for sure, that our bank account balance will be reduced by this amount, right? So here it is, right? Account 11,100 will be credited, right? Because assets are reduced when they're credited. What else is happening? Well, we have all these expenses that will be increased, and expenses increase as debits, and therefore all of these amounts will enter in the debit column, which will create the offsetting entry, and debits and credits will equal to each other. As we previously covered, right, it doesn't matter how many entries you have. What matters is the sum of those amounts at the end of the day have to equal. So sum of debits and sum of credits have to be in balance. So let's continue entering it. Okay. Alright, so here it is. Alright, and we're in balance, right? So this amount right here is a credit to account 11,100. It reduces it because it's a bank, and bank is in assets, and assets are reduced when credited. And what else is happening? All of these amounts, they're debits to these corresponding accounts, and these accounts are expenses, and expenses are increased when they're debited. Okay, so here we are, save and new. Alright, next we have another invoice that we paid using a check. So let's enter that one. Alright, bank account correct. Alright, payment date. Make sure that you check the check number, because again, when we're booking in catch-up mode, often documentation might be a little bit off sequence chronologically, and therefore it's important to double check everything. What do we have here? We have utilities, right? So we're gonna book it all under the utilities expense account. Let's enter our invoice number. Okay, so here it is. All right, here it is, right? So again, what's being debited, what's being credited? We know that we're paying it with a check, and when that check clears, it will reduce the bank account balance. Therefore, being an asset, assets are reduced when they're credited. So here it is. We also know that our expenses on utilities are going up, and expenses go up when debited. And here it is, debits and credits are in balance. So again, this amount right here is a debit to this account. This amount right here is a credit to this account. All right. We're going to save and new. Okay, we're not going to do any more checks. We're done for now with the checks. All right, and we are ready to book receipts for the month of January next. So here we are. We have our gas station receipts. Again, it's an expense. We've done that before. Let's do it again. Okay, so we have our gas station credit card. Okay, in this case, the date of the receipt is the date of the transaction, right? Because we got it at the point of sale. All right, credit card. Alright, 389, here it is, and this is our fuel, alright, here it is. Continue using as a reference number our receipt number, alright, and here it is, the amount, right? So, what is being debited, what is being credited? Well, we know that expenses are going up, and expenses go up when debited. Okay, what else is happening? Well, we know that we're paying it using our credit card, right? So credit card is a liability. Liabilities go up when credited. So here it is. So this amount is a debit to this account, 63,200, and this amount right here is a credit to this account, 21,100, right? And we're good to book the next one. Alright, next we have another gas station receipt, right? So we paid our gas station on Main Street. Alright, 125/2020. Okay, credit card, reference number. Alright, we have our fuel. Okay, let's make sure we just correct this. And we update the amount. Okie doke. So here we are. What do we have in terms of debits and credits? Well, we know one thing again, as previously, expenses go up, and expenses go up when they're debited. Here it is. What else is happening? Well, we know that our liabilities go up because we're paying it with a credit card. We're not parting with our cash. We're not parting with cash at the bank. So here it is, right? All right. We're good to go. Save and new. Alright, next we have a receipt from an online market that we ordered some items from there. Okay, here it is. Again, credit card being selected. Good. Alright, reference number. Okay. And we have kitchen knives, tools, so on and so forth. So that would be our small tools that we get to expense since they don't have to be capitalized. We're still going to use our invoice number as our description, as our memo box. All right, here it is, right? So what's going on? We just covered it. Let's cover it again. Our expenses on tools are going up. They have to be debited. All right, and our liability is going up as well because we're paying it with a credit card, and it has to be credited. So again, this amount is a debit to this account, 62,500, and this amount right here is a credit to this account, 21,100. Okay, so let's continue. Next we have a return receipt, right? So we're returning some of those tools that we purchased and we realized, hey, we probably don't need them. So we're going to use a slightly different one. And we have a button called credit card credit that we can use for that. All right, so again, we're going to use online market. Okay, so we're going to enter the correct date. Here it is. All right, and it was our tools, right? So we're going to use the same account that we just did because that's what we are returning. Okay, so here it is. Again, what's being debited, what's being credited? Well, we're returning some of the items back to the online market. Therefore, they will refund our credit card, and our liability will be reduced as a result. Liabilities are reduced when they're debited. So let's book that one in. Okay. Here it is. What else is happening? Well, our expenses on tools are also reduced, right? Because we purchased some, we recognize it as an expense, and then we realize that we need to return some of those, knives and cutting boards. So therefore, our expenses are reduced, and expenses are reduced when credited. So here it is, right? And now, when we're using this module, this amount right here, right, it becomes a credit. And it's a credit to this account, 62,500. And this amount right here becomes a debit, and it's a debit to this account, right, 21,100. All right, so we're going to save in new. Okay. Next, we have a transaction receipt, okay? So we borrowed some money from our credit card, right, to get this whole business going. So in this case, it's not going to be an expense. And here we can, essentially use one of my favorite tools, as you know from previous simulations, right, is journal entries. And we'll use more of that in the future. So here it is. 317657. All right, so what's happening? And it's not an adjusting journal entry. So make sure that this is unclicked. See, it looks weird, a little strange. So when it's green, it's actually clicked. Right now, it's unclicked, even though you kind of see the shadow. Again, what's happening here? Well, we're taking this cash advance from our credit card. All right, so we know that our liability will go up, right? And liabilities go up when they're credited. So let's put that in there, right? All right. What else has happened? Well, we took that money and temporarily we put it kind of in our pocket, right? It's pure cash at this point. And cash is an asset, and assets go up when debited. So here it is. All right, so to reflect this transaction right here, it's all here. And again, you have your debits and credits right here, but let's just, make sure that we fully understand what's going on. Liability goes up when credited, right? We owe more money because we just borrowed that. What else happens? Well, we're just holding 2,500 of cash, right, in our pocket or perhaps in a bag. And therefore, our cash went up, and asset slash, in this case, it's cash go up when they're debited. So here it is, right? And debits and credits on general journal entries are right here. So we're good to go. Saving new. Okay. And then we also have a payment on our credit card, right? So we're paying it down, and we can use general journal entry for that, or we can use transfer. So let's mix it up a little bit, right? And we have our transfer button right here. All right, so we're going to be transferring from our bank account, all right? And again, we haven't booked the deposits yet. Remember, we booked those during, in the catch-up mode, sometimes we book it during reconciliation, which we'll do in this case. So this balance is not accurate, and it's typical when you are booking in catch-up mode. All right, and we're going to pay down our credit card, right? And the amount is $500. Okay, and the date is 1/25/2020. Okay, so what's happening in terms of debits and credits? So let's dissect it. So we're transferring funds from our bank account, so the balance will be reduced, right? And again, we remember that bank account is an asset. Assets are reduced when credit, so we can enter this one. Here it is. What else is happening? Well, we're paying down our credit card balance. Therefore, we're reducing the liabilities. Liabilities are reduced when debited. So here it is, right? So this amount right here, this amount, is both a debit and a credit. And we covered it in our desktop simulation. Some interfaces in QuickBooks Desktop have similar situations just like this one, so nothing unusual to us, right? So this amount right here is a debit to account 21,100, and it is a credit to account 11,100. Okay, save and new. Okay, we're done booking January at this point, and we will move towards reconciliation next.